Crypto markets are crashing again, and I'm going to look into exactly what's going on at the moment, try and explain to you guys why the market is looking so bad. I've got bad news and a little bit of good news peppered throughout this video here, so make sure you hit that thumbs up, like, subscribe on your way in. My name's Peter. I talk all things Cardano and crypto, so let's get into it. So let's have a look back in November here. This post was looking into why the markets crashed back on the 14th of November, just 2 or 3 weeks ago now. And we had a look here at like US inflation came in hotter than expected. Chances of rate cuts now are sharply dropped, and they still don't look that great at the moment. We also had a look at the AI bubble bursting back then as well, with SoftBank dumping its position in Nvidia and taking out 5.8 billion right before the the earnings report for that quarter. And then we also had 2 subprime hedge funds collapse as well. So lots happening back in November, making the markets look absolutely terrible, as you can see there. Now, we also now looking at some various speculations about what's happening on this particular crash here. And you can see here, this user posted the dumping of BTC via various exchanges all at the same time. Now, I'm not saying this is a coordinated dumping of the Bitcoin asset, but these exchanges could have just had stop losses and they're protecting their positions as is. And as a result, they triggered off a lot of these Bitcoin sales and outflows in the market. You can see there, it doesn't look too good. But we do have various good write-ups about what's happening at the moment. So what happened today? BTC dropped 5K in hours, 210 billion wiped from crypto, 700 million liquidations, and literally zero bad news anywhere. Not macros, politics, earnings, and not even random FUD tweets. This looks like only one thing only: Wells dumping charts and reset leverage. Classic crypto manipulation. And you can see this is today's massive dump. And it's not looking good. It's still going down at the moment as well. We had a slight pickup and still continuing down as it goes. There's various articles here that do look into some really good reasons why this is happening. And this one's from Business Insider. And one of the big things here is crypto adoption. In terms of the amount of users uptaking and coming into the crypto space, it is definitely down. So crypto usage down 50% of retail traders from 17% this summer. So that's mid this year. The other reason is around the amplification of selling and buying of assets. With the ETFs coming in, the exchange traded funds, the effects that has had have been, I'd say, quite dramatic, in that now larger institutional players can come in and essentially manipulate the money, manipulate the market. So here we go. Second reason, investors are now exposed to Bitcoin through ETFs. January 2024, which kicked off a 600% rally. And now with institutions' participation has boosted gains, very same exposure to Bitcoin that has also now contributed to a feedback loop of falling liquidity and heightened selling. So money comes in, money comes out. I said this in my previous videos as well. Looking into the institutional money that's coming in, everyone's excited. Everyone wanted all of that to come in. That takes away a lot of the decentralization of crypto assets and puts it back in the old system and allows big institutions to manipulate and control the money flows. I don't know where we're going, guys, but that is one big reason why we're seeing the massive outflows at the moment, because institutions can sell as they want to. Now, here we have another post here from Toknex, and they're looking at what's happening here. A couple of more reasons. The market is bleeding. Good. Total market cap just nuked 5%. Twitter is panicking. Telegram's crying. But if you look at the data, this isn't a crash. It's a leverage reset. We'll look into the details about that. This is a de-risking event. So all these people that are coming into the market, they're looking at where to put their assets so that they get the best returns. And if they're putting money into these highly speculative and volatile crypto assets, if there are some better, safer opportunities, they're going to move into those opportunities. And I'm going to talk about that in a second as well. So Powell speaks, there's macro fears, the PMI data release, recession fears, and quantitative tightening deadlines. As of today, I saw a news post that the quantitative tightening in the US has officially ended, and we're going to possibly look into quantitative easing where there'll be more money in the ecosystem. Now, what does this mean? And this is what it's all about. So this post here, this is talking about the Fed just announcing the end of quantitative tightening. And this is what it is. The end of QT will improve liquidity in the financial system. Looking back, QT was put in place mid-2022 to reduce the Fed's balance sheet as part of a broader policy normalization to unwind the large liquidity stimulus implemented in response to the pandemic. So when the pandemic hit, the government printed money to be able to spend it to help fight the pandemic. And that was required, to reduce deaths. That's the last thing people want to see. But because of that massive amount of stimulus into the ecosystem, we did see NFT markets rise, crypto markets rise, and a lot of people did quite well out of that. But now that money had to be wound back. They had to tighten the purse strings and get some of that money back, recoup their losses, reduce that overspend. And now with the quantitative tightening, this phase has now ended. So they're thinking that they've done enough of that tightening to be able to start spending money and injecting more liquidity back into the markets again. So that's where we're at the moment. But interest rates might not go down, and the inflation numbers are still a little bit higher in the US. So we might still have to wait until next month in January 2026 to see a better market outcome at the moment. So I too do believe that this is a big de-risking event. Now, if we look over in Japan, their bond yields, their 10-year bond yields have gone up. And gone up quite a bit here. So you've seen it go up over the last few years here, but 2024, 2025, it's jumped up quite a bit over the last year. It's now at 1.838%. So essentially what's happening here is that the Japanese government is issuing these bonds with a really high yield return. So if the government is issuing those bonds, investors are looking for the safe return here. So if the bond yield keeps going up, more money will pour into that because it's a safe bet. You know that the Japanese government will pay on those bond yields, as opposed to putting it into something that is volatile and speculative, such as crypto assets. Why don't you just park it into the bonds? You know you're going to get a decent return. And this may even jump up to 2%. So a 2% return on your the money there in your bonds, that sounds pretty good. It's pretty safe. That's a decent return there. So that's one reason why we're seeing the shift, people just de-risking and moving to safer bets so they can get the maximum yield out of their money. Now, one of these other things that I am looking at the moment is this news announcements from Crypto Ran. And this was why the market crashed back in on the 10th of October. So this is going back a little bit further. And this is a really interesting thing around MicroStrategy and how the big players out there are classifying companies that hold Bitcoin on their balance sheet. So on exactly the 10th of October, MSCI, the world's second biggest index company, published the below. They are questioning whether companies that hold crypto assets as their core business should be considered as companies or funds. If there are funds, they are not included in passive indexes. Why? Because this creates a circular loop. The funds buy assets, get bigger, and then is included in more indices and buys more assets. The expected ruling will be announced on the 15th of January 2026, and if this does pass, companies like MicroStrategy will be automatically removed from all indices. So all these indexes out there, a lot of people invest on the stock market and just buy in these indexes because you're essentially just buying the top 10, top 50, top 100, top 500 companies on the stock market. And that's probably the easiest way to invest. You don't need to look into the various companies, understand their balance sheet and what they're doing. You just buy all of them, just buy a little bit of all of them. And that's what these indexes are. And MSCI is looking into whether or not MicroStrategy and other companies that hold those assets, such as Bitcoin, should be included in those indexes. If MicroStrategy gets delisted from these indexes, that means there's going to be a big shuffle on the index, and MicroStrategy won't be in there, and people won't be buying into Bitcoin via MicroStrategy via the indexes. So that's what's happening here. And if MicroStrategy gets pulled out of it, a lot of these hedge funds and investors that just buy indexes won't be buying into MicroStrategy. So that's the problem here. So if this passes and MicroStrategy gets pulled out, we may see a drop in the crypto markets again. So January the 15th is another big important date that I'm looking at to see what happens with the market. If any of this news comes out early, it could shift the market dramatically out of speculation. And who knows, right now, the players might be pricing this in and moving money out in this particular announcement, or they might be loading up. I have no idea what's going on, honestly. So this is something definitely you need to look out for. Now, I did say I had some positive news for you guys as well. And having a look at the Bitcoin monthly returns here, the monthly returns for December this year aren't that bad in comparison to previous years. We've normally December here, you can see it has been pretty bad, except for the big halving cycles that do happen. But other years here in 2021 it was negative 18.9%. The year after that, minus 3.59. This year at the moment, it's minus 4.85%. So it's nowhere near as bad as some other years in the past. So we could be in for a much better market condition to ride into 2026. And with Trump in power in the US, we don't really know what's going to happen, but there is a lot of positive sentiment in regards to the crypto industry with regulations, the Genius Act, and so much more. So we may see a lot more positive news out of the US around crypto assets in general. Now, I thought this was quite an interesting video from Raoul Pal, and this was 6 months ago. Now, let me just play this so we have an idea of what he thinks is happening this cycle.
It's not a mystery. It is a repeat of the debt cycle. They are rolling the debts. They are doing the same thing each cycle. It's not to do with a halving cycle, nothing to do with any of that. It's all driven by liquidity cycle and funding of debts. Each phase, we get phase one of the banana zone, banana number one. The corrective zone, banana number two comes. Another correction, banana number three. So this is the banana zone. So that's what happened in 2020, 2021, off we go. Sorry, that was 2017, which again looks very similar to this one. That was the last one. Here we are now. It can't be clearer to me. I've shown you the macro evidence, the technical evidence, the sentiment evidence. Everything here suggests to me that hold on to your hats, don't fuck this up, don't lose control of your tokens, don't use leverage, don't get your wallet hacked. Just sit with it. Be careful. Don't get FOMO. Do all of the right things, and we'll go up to the next phase of correction zone. That's going to be harder because the next one that happens, we'll have a 35% drop, and you'll all say, "Is it over?" And you'll definitely be sure it's over. And everybody on Twitter will tell you it's over, and it won't be over. By our work, we suggest that because of the elongation of the business cycle, because rates were higher for longer, the forward-looking liquidity suggests that, again, probabilistically speaking, without any guarantees, this whole thing goes into Q1, maybe Q2 of 2026, which would align with Trump's, trying to win the midterms as well. So everything's lined up for us. I think it started. So keep the faith, keep building stuff, and let's keep driving Siri forward with all of this.
All right, interesting stuff there. Leave a comment down below, guys. Let me know what you think, what his prediction is like. But yeah, we're definitely, I don't know where, personally, I don't know where we're at. If he's right or not, because we did see a massive crash essentially right now. Is that the first phase correction, or are we looking into the second one already? We shall see, guys. Leave a comment down below. Let me know what you think. Now, this here is also quite interesting. This is a conversation from the Bitcoin OS team about narratives and what they're talking about at the moment. So let me play you guys this one as well.
That narrative of this is it. This is 126 was the Bitcoin peak. We're now heading into a bear market, is based on a fundamental idea, a fundamental narrative that we've had for well over a decade in crypto, which is we've got this 4-year cycle. And if you look at the 4-year cycle, the 4-year cycle ends in the year after the halving. We're in the year after the halving, and it ends between October and December. So right now, everyone who has been in this market for a while or is aware of that narrative is deeply concerned that time has run out. This was the cycle. And maybe they're right. I think they're probably not, but maybe they're right. But the psychological impact of that is that no one wants to go risk on right now in the crypto space. No one wants to go risk on right now in Bitcoin because they're very worried about being caught offsides, basically becoming exit liquidity in what is now going to be a 2-year drawdown. My sense is that this is having a massive psychological effect. And what could happen, what is likely to happen, is that come December, we will discover that the price is still more or less holding up. We will then need to see in January and February some kind of rise. And what that will do is it will confirm for people that the 4-year cycle is dead. We can't get confirmation that the 4-year cycle is dead before January or February, but in January or February, if the 4-year cycle is dead, that's when we're going to get our confirmation. And then immediately we're going to see sort of every single KOL influencer shill, talking head on Twitter, talking about this is the death of the 4-year cycle. And that in and of itself is going to become a narrative driver.
And you know what? I kind of have to agree with the death of that 4-year cycle narrative at the moment. So Yago is building Bitcoin OS, is building the DeFi layer for Bitcoin on the Cardano ecosystem. So he's using some brilliant tech to unlock yield for Bitcoin holders so they can stake it or something like that on the Cardano ecosystem and earn yield off of it, and all using zero knowledge proof. So this is some really cool tech that's going out there. And hopefully we do see that very soon. I've been speaking to various teams that are building some of the tooling and infrastructure needed to make this happen, and they're just about to launch their side of things on the Cardano ecosystem to make this happen. So very, very close to all this in the background. But this here, if he's right, and Raoul Paul here is right as well, this extended debt cycle here with the interest rates and whatnot coming into play could kill the narrative around the 4-year cycle. So I've seen the cycles happen a couple of times now, and I've held on through crypto winters, not knowing what to do. If this is all true, that will end that 4-year cycle narrative of the halvenings, creating that supply shock in the Bitcoin ecosystem and making Bitcoin go up like crazy. So that's probably dead as we know it already. Now, this is extremely bullish news, and this is MicroStrategy doubling down. So as we are all panicking and looking at the crypto market saying, hey, let's sell, the market's going down forever. This is the end. This is the end of the cycle. Let's sell before the death spiral happens. MicroStrategy is buying. This is absolutely insane. Balls of steel, I have to say. MicroStrategy announces the formation of a 1.44 billion USD reserve and an increase of its BTC reserve to 650,000 BTC. So I, from what I understand, they hold about 3% of all the supply of Bitcoin at the moment, which is absolutely insane. So if you want to read the press release, the strategy announcement, you can. Links in the show notes down below for you guys. But hats off to Michael Saylor for buying up all that BTC. And, the market could be a lot more depressed, but no, he's jumped in and bought the dip. Absolutely crazy. Some other things that were happening in the market at the moment is what's happening in Japan. And Japan has implemented a flat 20% tax on cryptocurrency gains. So from what I understand, Japan had a 55% tax, crypto gains tax, capital gains tax on the assets as they're being sold. So that's a massive amount of tax that you'd have to pay when selling off your assets. But now reducing that to just a flat 20% is probably going to make things a lot more appealing for Japanese investors. So one, there could be more people coming into the market because they know if they have some significant gains, all the tax they'll be paying is that 20% capital gains tax. The downside to this is that Japan has had a lot of people buy into crypto in the early days. So back in 2017, for example, there's a lot of Japanese ADA holders. And with this decrease of tax, does that mean they're going to sell their crypto assets, including ADA at the moment? Will there be a surplus of supply now, or some sell pressure because the Japanese whales here, ADA whales, will be selling off their ADA and cashing in on only a 20% tax? I don't know. This is pure speculation at the moment. Who knows where the market will go? The other big news item from Japan is this massive 135 billion stimulus into their economy. This is more than what they spent during COVID. This is a massive amount of money that's going to go to various businesses, the Japanese economy and people in general, to stimulate the economy and drive more growth. At the moment, it's quite stagnant. And if anything, people aren't seeing a good return in the Japanese economy. So having this amount of stimulus in the economy will hopefully increase investment, increase spending, and generally improve the Japanese economy. And like I said earlier in this video update, when there's a lot of money in the economy, there's a lot of stimulus checks being printed out there, people look for certain gains. They become speculative in their investments and potentially being put into crypto assets again. So with this, so one, we have a massive amount of Japanese people, Japanese money coming into the economy, plus this very low tax rate for crypto assets. We could possibly see more retail users come into the crypto space from Japan. It might be a good idea to start writing documentation and all that stuff for onboarding crypto users in Japanese at the moment. Anyway, that's all the news I have in this particular update in regards to what is happening and why the crypto market is crashing at the moment. If you learned something, if you want to leave a comment down below. If I missed something really important, I probably did. I had to skim through a lot of news articles to try and pick out the best pieces there to give you guys. So I know there's a lot of other bits of information that I could have included, but it would have been like an hour-long video, and no one's got time for that. But leave a comment down below. Let me know what you think is causing this market crash at the moment. If you haven't done so already, hit that thumbs up, the like, subscribe, notification bell on your way out, and I'll see you guys in the next video.